Hey everyone! Welcome to another episode of On the Flipside. On the first Monday of every month, we talk about any topic in mindset. And every other Monday after that, it's any topic in real estate. My name is Diana Lizarazo, and today's guest speakers are Elizabeth Kelly and Cory Sperle. Now, before we get started on the show, I want to share some exciting news with you. I have created an application that solves two critical problems in our real estate investing industry. It solves searchability, being able to become searchable, and being able to build trust and credibility in our communities. Now, so if you want to get in there, you want to go into realestateinvestorfam.com. Well, I'll also have it in the bio or in the description. Now, back to the show. Now, on the flip side, today's topic is going to be on how to solve the problems that we've come with this environment. So what are the solutions and what are the problems that people are seeing right now? And if you guys have any comments, let us know what are the problems you're hearing, because we can also answer those for you. So let's get perfect. Cory, on here. Are you guys seeing my message? Okay, yeah. Hey guys. Hey Elizabeth. Hey Cory.
Hey Diana, how are you?
I'm good. How are you?
Good, good. You have a nice weekend?
I did. Very good. Very good. And Cory, how are you?
Doing very well. Doing very well. It's a little bit rainy here in Kelowna, but I can't complain. It's usually hot, so.
Nice to have a little break, right? So I think today's topic is going to be a lot of fun. But before we get started on that, Elizabeth, do you want to start first? Just tell people a little bit about yourself, and then afterwards, Cory, tell a little bit about yourself.
Sure. So my name is Elizabeth Kelly. I'm a real estate investor and a coach. I've been an investor for almost 20 years now. And Cory and I met last year. Cory asked me to be a guest on a summit he was hosting. And we just got along like a house on fire since then. So we've set out on a mission where we want to help people access information that is provided in the world of real estate quickly, easily, and for a low. We don't want cost to be a barrier to entry to be able to become real estate investors. That's part of the reason we love working with you too, Diana, because that's a value you have as well.
100%. Yeah, I was just going to say, I totally agree with you guys. And Cory?
Yeah, my name's Cory Sperle. So I've been a multifamily investor mostly for almost 25 years, going on 23 years. I don't want to date myself too much. I got into real estate a long time ago. Things were a lot different. We pretty much only had the Rain Group back then. So, over the last 20 years, I didn't do a lot of social media. I didn't do a lot of sharing. It's really just been the last couple of years where I've started to, help other investors. I kind of stumbled on it accidentally. People just asking me for advice. So that's where the the summit idea took off and the coaching. So I teamed up with Elizabeth, and then we find we can reach more people and actually help more investors, especially in kind of tumultuous times like now. There's a lot of uncertainty out there. A lot of people aren't sure what to do. A lot of fear in the media. So we're trying to just send positive messages about what's really happening out there.
I love it. Thanks for sharing. And yeah, so I think like that, there's so many problems that people are having. So curious on your guys' opinion, what are you guys hearing that are the main problems you're hearing right now that investors are having?
Do you want me to take this one first, Cory?
Yeah, we've been doing this now. Well, this is Real Estate Resilience Part 2. We actually started this in October of 2022. So we've really been planning this since the summer of 2022. Right when the whole inflation interest rate thing started to take off, the first correction in housing, right, it dropped a lot. We decided, well, we need to do resilience. Today, it's very much about debt service, cash flow or lack thereof. A lot of people are in variable rates, HELOCs, this kind of thing. Rates are very high, double digits in a lot of examples. And even commercial real estate, in the realm that I'm in, the landscape is a lot different, right? CMHCs, they're pulling back the strings. It's not easy to lend. It's very difficult to do a deal today. even though there's some still decent terms, Elizabeth and I have talked about this numerous times. It's very difficult to find properties that cash flow. So, we're having to do more and more creative methods to get into the market today.
Absolutely. And people can almost sort of be divided into 2 or 3 different camps. So there's the people who are struggling right now because of the interest rates, debt servicing, as Cory mentioned. So people who are in sort of a negative cash flow position and they're trying to figure out how to dig themselves out. Then there's people who are not in that same situation, but they don't know what to do. So they might be overwhelmed. They might be afraid, like, what do they do? They have some money. They can do, another mortgage, couple more mortgages. What's going to be the best investment for them? And then there are people who are out there and they're confident and they're ready to take action and they just can't find deals. So that's kind of like the 3 main types of investors we're seeing a lot of right now. And this is definitely not the time to do like negative cash flowing stuff and trying to buy at top dollar and those kinds of things. Like, this is where we have to be really creative and really strategic. We need to almost have a plan in place when we're buying for how we're going to, like, what a business plan. It's not just, buy an apartment building and forget about it anymore.
Or a pre-sale condo. You need multiple exits, you need multiple options. It's not the pre-sale condo boat is sailed.
100%. I agree. And it's true. It's like having many exit strategies or just understanding how everything comes together, because it can be so scary if you're only thinking, oh, okay, I'm going to do this, and you don't think of some of the what ifs. So Absolutely. For the cash flow, so for the cash flow, what kind of advice would you give to people at a high level to be able to, like that, like you said, this, all we're seeing is negative cash flow. So is it we want to be patient, or what advice do you have for the viewers?
Well, I mean, not everybody. Go ahead, Elizabeth. You can take this one first if you want.
No, go ahead, Cory.
Yeah, so we did a webinar. We're doing 3 ramp-up webinars for our summit. We have another one tonight. Tonight is all about social media and business. But last week we talked about, it was all about maximizing cash flow using creative methods. So I actually did a poll during the show. We had about 70 people on the show. And surprisingly, it was about 80% said yes, they were struggling with cash flow, but 20% said they weren't. So we talked about different strategies on that. So it's not everyone who's affected. So that's first and foremost. A lot of people are actually benefiting right now because rents continue to go up, especially where they were depressed for a long time. I know my cash flow has been getting better every month. I'm in fixed rate mortgages on the prairies. I'm finally raising rents. So my situation is completely different than someone who's, maybe flipping in New Brunswick or Ontario. So it's really geographically dependent and investment dependent. But one thing that we talked about, and Elizabeth can expand on this, is short-term rentals, or converting a space. This is what some people are doing to increase their cash flow. It's kind of, getting in the, magnifying glass of municipalities, but, there are workarounds for that. And it's a great strategy, and Elizabeth has used that very well this year in her own portfolio.
Yeah, thanks, Cory. I'm a very firm believer in get your house in order before you acquire more. So if you already have investment properties, you need to be looking at, am I maximizing them? And am I generating the best possible returns? And then the places where I've seen stuff that makes more sense is where you're not just investing in like a physical asset, but you're investing in a business. So whether it's the opportunity to, buy a motel and fix it up and make money that way. For me, I had a commercial building that was really struggling that didn't come back from after the pandemic. So I switched over into Airbnb. So I have 4 suites in the building, and I use that as an opportunity to be able to market and to get my building out there. As a result, I've also done some other marketing initiatives, but I'm focusing on cash flowing a business and not just cash flowing a building, if that makes sense. Are you following me?
Yeah, that's great. And even you said it at the beginning, right? It is, I feel like, so important to treat our real estate as a business, because it's just, if you're not, you're just increasing the risk, to be honest, in yourself to like something bad happen, right? It's just like, if you're not thinking about what can happen, then those things can happen because you're not prepared for them.
Absolutely.
Awesome. And then, so what about now? So we've talked about people that may be having cash flow issues or maybe not. And I feel like the ones that are maybe not, like you said, they could be though dealing with fear or just even don't know how to get into the market. So what about for those group of people that have cash, but maybe the fear is big? Or what advice do you have for them?
You want
Yeah,
to take that one first, Cory?
if you're a new investor, sorry, I'm just looking. I'm seeing like my son's friends are joining this call. I don't have no idea how they found this, so that's pretty cool. See young kids interested in this. I don't see my son, but maybe he's going to be on here. I'll just add one more point to the last question before I dive into that one. So, I mean, deleverage and consolidating debt is another way to increase your cash flow. So, I mean, even if it means selling dog properties, sometimes we have to, maintain our debt levels, to a certain amount. But for people getting in, it's very important to follow people who've done what you want to do and have done this for a long time. Like, I mean, like 20 years is the best, 10 years ideal, because let's just be honest. I mean, a lot of people have never seen a down market.
Yeah.
People that have been investing in the last decade. I mean, Elizabeth can tell you all about down markets. You ask her about, her Maritimes experience, and I went through this in Alberta. But a lot of people, especially in British Columbia where I'm at, we haven't had a major correction here in 20 years. So you could be a 35, 40-year-old investor and never hit a speed bump, right? So you really got to follow people who've gone through these tough times. But buying a property today, I would have, like Elizabeth said, I'd have a solid plan. I'd have a solid reserve fund, like no matter what you're doing, especially if you're doing a JV. I see a lot of people doing JVs right out of the gate. I've seen it pulled off a few times, but really you should use your own cash to get a track record first. And then solicit funds from the public. But I've seen there's too much. I wouldn't even say it's noise, but too much opportunity. But a lot of it's kind of fake opportunity. It's hard to know who to listen to. So I would say just take some coaching, find people, follow people that are doing what you want to do, get to know them, ask them questions, and most of all today I would say just be patient. Like Elizabeth said, there's no reason to dive into the market. I mean, prices aren't going up 10% a month like they were. Realistically, next year we might even be below where we're at today. So there's nothing wrong with pruning your own portfolio first and being extremely strategic in the deals that you do take on going forward.
Completely agree. And it's so true, especially during COVID, felt like money was being thrown at people. It was just like people were so like willing to give away their money. Now I kind of like actually this environment because like that those people that know what they're doing, they can actually show it. Whereas others, it's like, where's your pro forma? Where is this? Where is that? Like, do you know what you're talking about? Can you answer the questions? A lot of people get stuck on the questions. And I think it's kind of important because this is at least times where you can actually learn how to properly make sure that you know what you're even doing. And like you said, to be honest, I'm the same. Like test it out yourself. Like, how do you test it out on other people's money? I don't know. I feel like that's just not a good idea.
I agree with that 100%. That's actually one of my I don't know, people know better than to get me started on talking about that at like a dinner party because I have trouble shutting up about it. But I think there's so much, talk about OPM and, if you don't have any money, just use other people's and blah, blah, blah. But there's not enough conversation around the responsibility that comes with using other people's money. The fact that, someone has worked hard for, that $100,000 or $150,000, they've paid taxes on it in all likelihood. And now there's a tremendous amount of responsibility that you have when you borrow that money and use it to invest in real estate. And the reality is we're going to make mistakes and we're going to make more mistakes when we do not have the experience, when we haven't been investing as long. We're going to learn some tough lessons. Anybody who tells you they've never lost money in real estate, I'm surprised because I've done multiple deals where they didn't go according to plan. Some of them lost money, some of them broke even, some of them didn't have the returns, but it's really better to cut your teeth and get your experience on your own deals versus what can happen to you. You borrow someone's money and your deal doesn't go according to plan. How are you going to make them whole? How are you going to make sure they get their money back? These are things that impact your reputation.
And there's just exactly. I was going to say, there's just a lot of things that even with you doing your own deals, you learn, because like that, if you're going the first go and you're using other people's money, you don't even learn the preventative measures, and then all of a sudden you're being called a scammer, or you're being called like every name in the book, but it's because, like you said, like experienced investors will go through problems too. There's no one that I can't believe anyone that has like 100% like success rate. It's like we're all like, especially like for example this market. I feel like this market's so different than the 2008 market. So it's just like I don't know. I feel like it's very weird. So it's like we're all also learning, but I feel like with experience, you learn how to, for example, prepare people for what it is that they're getting into. Whereas a new investor will just be like, oh, yeah, give me your money, and that's it. It's like, and then it's just like, but they need to understand what are the risks involved. You yourself need to understand what the risks are involved. There's so much that needs to happen. And even communication-wise, there's just so many areas that you need to know and understand so that when you have a partner, they're kind of aware from the beginning and you're kind of taking them along. And if there's a problem happening, okay, but they should already know something's coming up, not like at the last minute, oh, by the way, we're going into a foreclosure or bankruptcy or who knows what. And you're just like, what?
Yeah.
Well, and don't forget, it's generally illegal to solicit funds on social media, right? You got to be on the right side of securities law too. And one thing that Elizabeth said, she stopped short of saying every investor will lose money eventually. But I believe that it happens to everybody. Markets crash, markets correct. The longer you're in this, the more, I haven't talked to anybody who hasn't had a hiccup. I mean, I talked to 75-year-olds who've been investing for 50 years. I've seen every cycle under the sun, and even they've lost money on properties. It happens to the best of us. You got to be ready for that. You have to be honest, and a lot of people, when they do JVs, they get lazier instead of do more diligence. It's the opposite of the way it should be.
Exactly.
You do your diligence on your own money, but if you lose your own money, it's not the end of the world. If you lose someone else's money, it is a big deal, right? And you probably won't do another deal again. So you
exactly
just don't want to run into that scenario, right?
Yeah, that's exactly. And because if you're using your own money, you feel more responsible. And again, if you don't feel responsible about it and you lose it, I mean, at least you've lost the money. You shouldn't be doing deals with anyone else, So yeah, any other things that you wanted to touch on in the cash flow side before we move on? That you wanted to talk about?
Yeah. Yeah, I'd like to add, I think it's really important to look at where your deals are coming from, because I feel like in this market where it's still unpredictable, we're not sure if it's going to start going up again, it could go down for a little bit longer. I feel like making money in the buy, it's always important for investors, but it is critical right now. That is your buffer. That is how you're mitigating some of the market risk. So if you can't make money in the buy, if you're buying with a realtor from MLS, and you can't negotiate money in the buy, then you should be thinking very carefully about moving forward. This is an ideal time to be looking at, some of the more creative strategies, agreement for sale, buying directly from a seller, working with wholesalers. Like, this is exactly the opportunity. There are some fantastic realtors out there. I have a client who is one of these, and if a client comes to him and says, hey, I want to do this, he'll go out there, he'll pull out all the stops, he'll look at what's listed online, he'll talk to the wholesalers, he will go all out to find the type of property that his buyer is looking for. So you want to be working with someone who's creative like that. And if you don't have experience with a strategy and you want to get into it, you need to make sure you do your due diligence on the entire process. There's a lot of investment strategies that worked 2 years ago that aren't working now, like the BRRRR strategy. In most markets, that's not an effective way to invest right now, because you can't refinance predictably and get your money back out again. Some people are having to leave money in, the loans are coming back at a lower loan to value. All these different factors are going on. So you have to make sure that you've done your due diligence ahead of time and you have contingency plans built in for what happens if the appraisal comes back lower than I thought. What happens if I was anticipating selling this property and I can't? And those are the people who I'm seeing in the most significant distress right now, are the people who had one exit strategy when they bought the property, and if they can't execute, they're in trouble.
Yeah,
100%.
Yeah, I love that you need something on the buy, and really, you have to have a good reason to buy anything. It doesn't matter what it is. If it's a house, a stock, there's got to be a solid reason. You're not buying it just to go with the flow or because you speculate it's going up, especially now. Like on a multi, for example, I'll buy it because, rents are $100 below market. I can quickly bring my rents up. Or you're getting it for so much below appraised value, you can quickly bring the value up. But then you need two returns. You also need a long-term return on upside on a well-located property that's going to have appreciation over time. So whatever you buy, like as if you're researching a stock too, you're not going to buy, GameStop or something that's the hottest thing and hope to ride it out forever. You have to have a long-term plan, but you also need some short-term juice up front too. So now I think that's extra critical. I mean, I know for myself too, I'm demanding a lot more. My checkbox that was maybe eight things out of 10, now it's 12 things, right? I need to see this and this. And you know what? If I don't see that, I'm just not going to buy it. Another deal will come, and it always does.
Yeah,
Patience.
right? And that
that
patience is what really pays off. I was talking to my friend Christian this weekend. He's put an offer in finally on a property. He's been talking to the seller for 8 months now. 8 months. He has very patiently bided his time. The seller started up here. Christian said, I'm down here. And then the seller came back and he didn't hear from him for a couple months. Then the seller came back and said, okay, well, we're willing to entertain your previous offer. He's like, that offer's off the table. The market's changed more. Financing is harder. Sorry about that. Here's my new number. They were like, he goes, you can wait another 6 months and the next number will be lower than that. So what do you want to do here? And I think he's going to end up with the property. So being patient can actually bring you the best deals. And it's not just about the price that you pay, it's about the conditions and terms that you're putting in place in the buy as well. So you might be willing to pay a little bit more if you can get seller financing or a vendor take back in this market because financing is so much harder.
Yeah.
100%. And exactly, the patience, being patient about it is so important because especially one of the other strategies that doesn't really work very well right now is, and I'm saying it because that's what I'm seeing, it's flipping. Flipping is people think I'm ridiculous when I give my numbers, they're just kind of or not numbers, I give, my offer just because it's you realize I have to close twice, not only in everything else, plus just everything has gone up. So it's just, it's, patience is so important. Although I think the one nice thing I really love about this environment is that you can actually also take your time. Because I felt for example, in COVID time, if you weren't experienced and you went in with no conditions and you didn't bring your whole team in to at least do the revision on the first view or whatever before you just go no conditions. Even people in those times, which was things were good, were getting screwed over. At least now, if you don't have experience, I feel like you should be taking advantage of this time personally because you can actually, go in with conditions. You can actually take your time to think about things. I felt like during COVID, it was you had to have your numbers set and your go and you're ready to get it done. And if you don't have that experience to understand what is a good deal pretty quickly, it could go bad.
Yeah, I think we're going to be suffering COVID hangover for at least until 2025. Who would have dreamed in a million years that a mass unemployment event, 20% of the country was unemployed, would cause real estate to go up 50%? I mean, who on earth could have called that? I had this house, I panicked sold it in May of 2020. Within a year, it had gone up 40%. Absolutely backwards from what anyone, well, not anyone, Elizabeth and I have talked about this, a couple of investors saw what was going to happen with the collapse in rates. But I think there's still a lot of, people aren't talking about this, but there's a lot of artificial demand out there. We got subsidies, the government's giving subsidies like the first time home buyer grant, things to keep the market propped up in a sense, right? Are we going to have a hard landing or a soft landing, right? And I think the effects of COVID aren't over yet. From what I can see, the country's in good shape, but we had a massive run up in prices that we've never seen before. And I think it's going to take some time. The affordability piece, you can go back 50 years. It's usually 30 to 40% of household income. Today we're at 60% of household income, for shelter. And Elizabeth and I have talked about debt. A lot is happening in the debt markets too right now. I just got a line of credit in the mail and noticed that my line of credit interest is going up. I haven't even used it. So banks are starting to shore up their positions a little bit. So as investors, we really need to be aware of these things that are going on and position ourselves for defense and also have cash available. There's a ton of cash out there too. A lot of investors don't know where to invest, don't know who to invest with, want to invest with people that have track records and experience in markets that are going to do well. Like Diana, you mentioned flipping. Well, for some people, for me, that would be risky because I don't know the first thing about flipping. But you have a massive wholesale list. You could probably still make money on a flip today because you know what you're doing in a specific market. So it's really, geographically dependent on and also on your level of expertise in that given niche, right?
100%. Yeah, and actually that's very true. Because I think like technically strategies can work at any time, but I would say, but you have to be very experienced to understand because you start becoming in the times where you don't find them, you're finding really like the diamonds. And there aren't that many out there. It takes time, patience. Any other comments that you wanted to say, Elizabeth? I felt like you wanted to say something.
Well, I'm just thinking because so many people are in such different places right now in real estate. Like you've got the people who already own who are struggling. You've got the people who have money and aren't sure what to do with it. And I feel like this is one of the opportunities where network is so important. If you aren't sure what to do, reach out to people, talk to people about what are they doing, where are they seeing opportunities, and it could be very different based on your investment strategy or based on the market where you want to be. So being able to connect with other people and say, hey, how are you doing? What have you got going on? This is, in my experience, how typically, if private lending is a strategy that you want to get into, this is a great opportunity to go, hey, what are you working on? And if you do your proper due diligence, never skip the due diligence process because you meet someone and you think you're best friends overnight. I'm not advocating for that. But it is important that you know the people that you're investing with. I think a lot of people think that JV partnerships are like what you do when you have no money. And the reality is it should be, I am signing up for more challenges because now there's multiple people who get to weigh in. I'm signing up for more responsibility because now I've got to communicate everything that's going on with another party. And then I should be signing up for a tremendous test of my integrity and my knowledge. So again, we come back to our network. Who's in your network who wants what you have and you can offer it for what they have that you want? Typically, we're trading time for money when it comes to partnerships, right?
100%. Completely agree. And I think that also kind of it leads into, I guess we should now talk into our other topic, which is, I mean, you and experienced investors, but getting into the environment now, with the fear that is out there and just how to make a good decision or what tips you have for them to be able to get in and talking on both sides, new investors probably more. I think though there are also experienced investors probably feeling the fear. Like I feel like for me, I may be a lot more conservative now and I don't know if it's like too much, finding that balance sometimes is also hard.
It is for sure. And finding people you can trust to talk to, whether you have a coach, the education piece is huge because I find that fear diminishes when you feel like you understand a situation. A lot of times fear comes from, it's sort of that thinking like, what is going on out there? What do I not know about? What have I not factored in? Have I run my numbers correctly? Can I trust this person? When you have educated yourself and you have someone like a coach or a mentor on your side, then it can make a tremendous difference in terms of your level of confidence. That being said, there are some people who take, dozens of courses and they attend every webinar and every podcast and they download everything and then they still don't take action. Those people, again, benefit from support because it's okay. I'm going to push you off the ledge. You can fly. I know you can fly. We just need to show you that you can fly. And that piece is tremendous as well. But it should be careful, considered, and knowledgeable action, not random, oh, I hope this works kind of action.
Yeah, not good to be doing that right now, especially right now.
Oh boy. I like the way you phrase that. And we can be honest. I mean, we're not doing nuclear physics here. This is real estate 101. This ain't rocket science, folks. I mean, for most people, the least risky strategy to start with, they want to do something exotic. They see Mike Holmes. They want to do the flip. They want to do the huge burr. They want to repatriate all their money in a year. All this like crazy stuff. The term burr wasn't even around when I started. We called it value add. I only learned about it a year ago what it actually meant. That's how bloody old I am. But the strategy to start is a house hack. Even that's a new term. I mean, you buy a house, you live in one section, you rent out a section to someone else, then they help you pay your mortgage. And now those are coming back in a big way with the secondary units with densification. But if you're just starting out in real estate in most markets in Canada, that's where you should start, plain and simple. And then you can build home equity from there and refinance and go off into other projects.
Yeah.
So, I mean, I don't necessarily know that you have to spend tens of thousands of dollars on courses if you don't know what you want. I mean, it took me like 5 years before I even joined RAIN. There's a lot of free information out there. A lot of it's bad information. So you still have to watch. You have to watch shows like this or watch our summit, that we're hosting on October 14th, to get some good advice that way. But you don't have to spend a bunch to get started is basically what I'm saying.
Mm-hmm. Especially like you said, I think that's a great point and I think that's actually just a problem that happens. You go into something and I feel like you get shiny diamond syndrome that you're like, you want to do every single strategy that's out there. And then I feel like you end up getting very lost and doing everything. And then, I feel like you spin your wheels a lot doing that. And then probably finally down the line, you get into the strategy and even that mentor is not even the mentor that, for example, teaches that strategy, So it's just like doing the research helps, because I feel like that's also something that sometimes happens with mentors is that people come in thinking one thing and then the mentor doesn't teach that strategy, or there needs to be a beginning, to help them decide what it is that they need to do. Because I feel like people just come in and be like, oh, I want to do this. And then is there a vetting process to know you actually want to do that, or you're just onto the latest shiny diamond,
Yeah. I actually have that conversation with pretty much everyone who comes into my coaching program, because I find a lot of people have an idea about what they want to do. They saw a TV show, someone in their network did it, they follow someone on social media, and they're like, oh yeah, I can do a flip in 22 minutes. And you're like, no, it does not work like that. Also, you'll be bald by the end because you're pulling your hair out with frustration. So, and like Barb says, one size doesn't fit all. So I think it's really important that people understand the pros and cons of the different investment strategies, and there has to be alignment between, this is my network, these are the funds that I have available, this is my level of knowledge, and this is how much time I have. And there has to be alignment between where I'm at and then the strategy itself. If you've got $20,000 and you've got 8 kids under the age of 6, flipping is not the ideal strategy for you. You're short on money and you're short on time. So there has to be the alignment, and I think a good coach or a good educator, a good mentor is going to take the time to understand why it is you think you want to do this strategy, and ensure that there's alignment between the strategy itself and your goals or your vision for your investing journey.
Mm-hmm. I love that.
Flipping in kids, and it's a strain on a marriage too, right? They call it divorce dust for a reason, right?
That's hilarious. I've never heard that.
I know, neither have I.
Corey's got all the phrases. I love it.
Oh, yeah. I'm on a roll today. Let's just keep rolling.
That's amazing. But it's so true. And I think that's even the power, actually, that you say the community, I feel like is really good. If you first just get into the community, because you start like that, you can start meeting people, seeing what they do, getting to know what people do, and start really defining that for yourself, what it is that you want. Or like you said, or go with Elizabeth Kelly, because she'll hone you into the right area to get into, because it is so important. And I know with me, for example, it was really funny. I actually went in, it was the same thing. I wanted to do every single strategy. I did quite a few of them, and I found the funny thing is that what I wanted to do at the very beginning ended up being what I wanted to do now. And I was just like, I don't know why I did all these things. Although, it was nice to have the experience and know how to do everything, because I do use it a little bits here and there, or for the exit strategies, like you say, it kind of really helps. But I feel like if you have that clarity from the beginning, you can actually hone in and specialize really well on what it is that you want to do before, if you do decide to do another strategy. Because another thing I feel like with entrepreneurs, or at least, I don't know, me, it's you get really good at one thing and you do start wanting to level up and okay, what's the next thing? What's the next thing once you get good at something? But needing to get good at one thing first, I feel like becomes very pivotal, very foundational, especially in my opinion, if you're a person like that. Like I personally I feel like once I get to a certain level, I need to like level up and do something different. I get bored too easily.
This is a tremendous opportunity for new investors, and I invite young people to come, join us on our webinars and on the summit. It's great to see young people today because they're going to be defining where this goes. Like we have a crazy need for housing in this country, but the one thing mistakes that investors made, and we've all made this, is banking on our appreciation on our performance. We're doing an evaluation of how much our investment's going to make money. Oh, we're going to bank on 5-10% appreciation per year. Well, you got to take that right out of there now. You got to go like 0 for 5 years. If that thing makes sense with 0 appreciation, and mortgage pay down is also a lot less because we've stretched our amortizations to the max and high interest rates. So that piece that used to be a 30% return in 5 years is now maybe 10. So now you're left with cash flow out of the third profit center in real estate. So the deals going forward are going to be a lot leaner. It's going to force us as investors to be a lot more astute and awake and do value add opportunities. Having said that, there's going to be tremendous opportunities out there. Rents, I think, are going to just continue to climb, in the foreseeable future, unless the government does something crazy like national rent control. But I think there's more opportunity than there is fear out there right now. I think the next, we're going off this motto, Elizabeth and I, survive till 2025. If you got a portfolio, you can cash flow, you're going to lean out. If you can survive till then, you're going to do extremely well in Canadian real estate.
Completely.
Absolutely. I think one of the things too is that somewhere along the line, and I don't know where this came from, I feel like it's a phenomenon that I've started seeing like in the last maybe 5 to 8 years. People have this idea that, buy real estate and retire immediately, you're going to be rich. And the whole thing about real estate is it's slow. It's steady. It should be somewhat predictable. But if you are buying for what the property is going to be worth in 6 months or a year, you're taking a major risk. If you're buying for what the property is going to be worth in 30 years, can we say with certainty that the value of the property is going to go up? Yeah, absolutely we can. So when you're doing stuff in the short term, there's inherently more risk than when you're planning for, 10, 20, 30 years out.
Yeah. Get rich for sure if you do it right, not get rich quick. And a lot of people they want to do it because they hate their jobs. They hate their jobs, and that's the reason why they want to do real estate. Mm-hmm. That's a terrible reason to invest in real estate. Just like doing a joint venture, having no money is a terrible reason to do a joint venture, right? Mm-hmm. Your intention needs to be in the right place too.
Yeah, 100%. Those are all very good examples because it is true that happens a lot. And another thing I wanted to touch on that you said before, and it just kind of popped in my mind again, that I thought was good. Again, being able to talk to so many people, and I just wanted to give an example of that, was when, mortgages are still probably changing now, but I felt like they were really changing last year in September. And I just want to emphasize how you're saying, like, talk to many different people, because one person can be at one stage of for example, like I was talking to so many people on mortgages because I was in the process of deciding if I need to get a mortgage and what to do. So I was talking to a lot of different people, and it was just like different people were at different stages, for example, and different people were having even different results happening. And so it's so important because it may also happen exactly that, where you may talk to one person, they say like, it's impossible, you can't get the mortgage because of I don't know what. And then another person, they say, that they're able to get it. And I think it's so important to talk to many different people because at least at that time, I felt like literally changing like almost like every 2 weeks. Like it was like that this happened. So then now you could, or it's like all of a sudden, the banks were realizing they're bringing in new packages coming out that is going to help those kind of problems that came up because of the interest rate. Like there were so many changes going on in the like 3 months or 4 months that it was like one person didn't get their appraisal go well at all. And then all of a sudden 3 months later, it was like okay-ish now. Whereas like someone just got like really shafted just because they did it in September, for example, It's like felt so bad. I'm like, man, if you just waited another month or two. Yeah. I was like, and that would have been actually even your point to taking your time, because if you see something like, oh, I'm not really getting like a good appraisal or something, it might have been worth it to just like maybe wait it out, and be like, if you could, right? Wait it out and see, like, if you could. And then maybe like that 3-4 months go by and let's say you have to finally you get it done or whatever. But it was very interesting to just see like so many things changing, and you want to have that flexibility to not have to act quickly like that. Like that person had to act quickly and what got like not even half their money out because they had to act quickly.
Yeah, absolutely. And there's really strange like one-off situations that happen that if you didn't have a good network and connections, you wouldn't know. Like Scotiabank ended up in a situation last year where they got totally over leveraged. So they completely scaled back their investor program. And then it's only in the last couple of months that they've said, okay, we've restructured our everything. We're in a better place now. Now we're willing to do investor mortgages again. But if you were counting on Scotiabank on a particular product that they had and it was not available for you, you were pooched. So you really need to have the right people on your team and the right people in your network so that you say, okay, my plan A is this, but if you're a good investor, you're going to have like 3 or 4 backup strategies, things that you can do in mind, because there are a ton of flippers right there sitting with properties who, you know, they can't rent it out and cover their bills. They can't sell, but they can't rent it out and cover their bills. So, you know, they're going to take a monthly loss. If you want to do real estate to leave your job, it is not helpful when you have multiple properties in your portfolio generating negative cash flow, because now not only do you have to keep your job, now you have to go get a job at, you know, Metro, because they're paying $25 an hour now in Ontario. So you have to go get a job at Metro and supplement your income from your day job because you've gotten yourself into a property that is not cash flowing.
I've been
So
there.
there's a
I know exactly what you're talking about. It's interesting. Just because you can doesn't mean you should, right? Like, if I wanted a 100% loan to value mortgage, sure, I could shop around till I found them. But just because I can doesn't mean I should. You know, like it's
100%. Or even if people don't run their numbers. I heard a person last year that went into debt 120%. And I was just like, I don't think that's a good goal, especially right now. And yeah, I lost the property, you know, because it's like mortgage and line of credit, another line of credit. And I was just like, oh my God, that is not a good sign. And I was just, and they overpaid, And they, again, their solution was like, oh, you know, I'm doing this good service for this guy. He needed to sell it at this amount. So I was the only one that could buy it. You know, everyone was giving him these lower rates. And it was just like, oh my God, like, there's a reason why things happen, you know? And it's just like, even like that, you have to be too nice. I don't know.
We have to be honest about those situations. There's no magic cure for a lot of these people that did that. If you own 3 or 4 properties like that, you have total, you're indebted like crazy, and the value's gone down. You have to deleverage. You're either going to deleverage on your terms or the banks. So there's no magic debt restructuring. You can restructure debt to a point. There are a lot of creative solutions, but not for everyone. So I think it's important as investors that, you know, this isn't going to work for everybody. You really have to run your numbers carefully, and it could involve a lot of short-term pain. You're either going to, you know, bleed out slowly over a long period of time or all at once in a lot of cases. So, you know, I think more and more people have to be honest about that.
Yeah. And knowing where that point lays too, I would say, right? It's just like, maybe it's better to cut the losses now, or maybe you can hold off and you may not lose because you can finally like recover, but you have to have obviously the money to recover. But it's like having those plans in place are so important. Sorry, Elizabeth, I know you wanted to add on to that.
No, that's okay. I was just going to say, in the last few years, there's been such a huge focus on leverage, right? And everybody's like, oh, you know, grab all your equity out, take all your equity out, turn it over, put it into another property, blah, blah, blah. The people who are the most comfortable in the situation right now, the optimal point for leverage in a portfolio is between 60 and 65%. So the people who are comfortable and not experiencing this cash crisis are the people who have lower loan to values.
100%. And did it the right way, I would say, right? Because I don't know how some people are getting themselves into such high debts, because it doesn't, like, you're not really able to do that even if you would, but they like do things, you know, that they probably shouldn't be, and putting themselves into these massive debts. And it's, you know, I remember people getting upset like, oh, I can't get a mortgage, I can't get this because they don't allow me. And I'm like, You should probably be listening to that. They're not allowing you for a reason. Don't go going into other directions because that's a sign, you know? I don't know.
I saw Tony Good Vibes. He flashed out. I don't know if you're still on there, Tony, but if he's on there, we're doing our webinar tonight at 7 p.m. At 7 p.m. Eastern, 4 p.m. Pacific. So tonight we're talking about using social media and marketing. So we have Tony. He's going to be on telling us how to do it because this social media thing is still brand new to me. So it's something that I'm slowly getting more comfortable. So I want to thank you, Diana, for giving us, Elizabeth and I, the opportunity to come on here and talk to you about this today. So we're reaching new audiences that wouldn't otherwise have heard us. So thank you again for that.
No problem. And did you want to actually tell people about also the Resilience Summit? Just to give more information with topics or whatever, who will be on there?
Sure. Yeah, you can hit my bio or Elizabeth's bio. Elizabeth's much better at communicating the summit than I am. It's 2 full days of real estate. Well, it's resilience, so it's basically for anyone. You're starting or veterans. We have a variety of different topics. It's all about protection and opportunities. We're going to be going through, a variety of different strategies. So we're going to be talking about creative ways to do cash flow. We even have securities lawyers on there. We have social media experts, about how to, enhance your real estate business. I'm going to be talking about bulletproofing my portfolio. I'm going to be joining Christian Spilfogel. So for that session, Elizabeth's going to be talking about repositioning. She did a crazy reposition on a commercial property and totally changed the use out of it. So really, there's not enough time to really talk about everything because it's such a great event, but it's October 14th and 15th. It is 100% recorded if you can't make it live. So we have like thousands of competition prizes if you can make it live, but if you can't, don't worry, you're not going to miss out. The whole thing is recorded. And it's just part 2. We did this last year. It's really great. Everybody goes out and has a lot of fun. Everybody can network one-on-one with the speakers and with each other. And it's just a really good time. Elizabeth, did I miss anything?
No, you were awesome. The only thing I would add is that the recordings are available to you for lifetime access, and right now the tickets are $74 for a weekend of entertainment. Education. Education first. Although it will be entertaining because we have some pretty fantastic people coming on and sharing their wisdom and expertise. The goal behind it is really to help people wherever they are, to give them the support, the education, the knowledge that they need to take that next step. And I think if I hadn't, thanks Barb, she's saying last year's summit was on fire. If I hadn't done the summit last year, I don't know that I would have necessarily started using Airbnb as a strategy to boost my income from my building, but it's made a tremendous difference. Like I was thinking this weekend, I'm like, I took 4 rooms already in existence in my building, and I just took them up to the next level and listed them on Airbnb. And I looked around this weekend, I'm like, all 4 of my rooms are rented. Like that's income that if I hadn't done Airbnb, I wouldn't necessarily have had.
That was from one tip. Like one tip I learned on a refinance, that once the bank gives you the money, you're in control. So even if they ask you to pay back or renew a refinance, you don't have to. You can sit on that. And I did that for several months until the rates went to a rate that I wanted, and then I locked in. So that move saved me $100,000. I learned that on one session, and there was 20 sessions last year. So we have 16 sessions this year. So just to give you an idea. So yeah.
I love that because it's so true. Because sometimes we also have our biases, where it's like you're thinking like, I'm only going to do this because, I mean, that's your expertise, you're good at it. But then other people put these little, because they're experts in it, they put these little ideas into you. And then you think like that. You say like, oh, I'm never going to do, for example, Airbnb. Like, it just doesn't make sense for me. I don't do it, whatever. And then all of a sudden someone just tells you something that you're just like, oh my God, why am I not doing this? And I should get into, because I also had the same experience with, same thing, like you get information on, for example, like how people do cash for keys or like multifamilies. And I remember people like telling me, and I was just, because I was very like, I was just like, I don't see it with cash for keys. It just wasn't making sense for me. And then all of a sudden, just the way things are explained, and sometimes you need an expert that's in it doing it, which is exactly what resilience is, bringing in the experts to just share their knowledge, because like that, they'll say things in the way that you've never thought of, that they just bring light to it, and all of a sudden you think, wow, I should probably do this. It'll help that. It brings that creativity in solving the problems that you need.
Yeah, most sophisticated investors, they're in more than one asset class. Like I've been pretty close-minded in in multifamily, but this is really opened my eyes because especially if you're into one asset class or one location and the price just keeps going up and up and you talk about bias, it just creates confirmation bias. It just confirms to yourself that what you're doing is correct and there's absolutely nothing else out there, right? And that's when you run into trouble. So if you're proactive and you look at what other people are doing, especially what people are doing successfully today, is very key. Right? Elizabeth, would you agree?
Yeah, I definitely would. And it's funny because, you talking about confirmation bias, Cory, at this time last year, and it looks like Rosie just asked a question, which ironically, I'm excited to tell you the answer. So at this time last year, I was feeling really burned out. I've been doing property management, had my own property management company for 15 years. We had, at our biggest, we had like 400 doors. So it was like stupid numbers. And I felt like all I did was eat, sleep, and breathe property management. And if you have been, if you've done any property management, especially during COVID, like that was an uphill battle. It was one of those most thankless jobs, like teaching, right? So for me, I didn't want to get into Airbnb because I didn't want to be on call more than I already was. And what I found was managing Airbnb guests is so different than managing my tenants. And I love it. I love managing my own rentals. I have my team in the building. I have my housekeeper and I have my, my maintenance guy, my handyman, and, they're so excited. They're so invested in the building and the success of the building. And I so enjoy being an Airbnb host that it doesn't feel like work again. And I think it's like you said, Diana, we get bored. As entrepreneurs, if you asked me to do the same thing every day for the rest of my life, I think I would lose my mind. Like, I like the challenge. I like the opportunity. I like the learning. And adding that new, I'm like Cory, or I'm like you, Diana, I've tried most strategies, but what I feel like that does is it enables me to find deals and to find opportunities, and I feel like right now, great deals are made, they're not found.
Mm-hmm. And it helps you become more creative, I feel like that. Like, I do love learning all the different strategies because sometimes you can kind of pick and choose certain things that you've learned from different strategies that you may have never used in that one specific strategy that you're currently in just because until you've done it, sometimes you like that strategy may not be like something to say normal, quote unquote, but then all of a sudden you've learned it from somewhere else and you're like, oh, this would kind of apply, or why don't I try this? And it kind of helps out.
Yeah. Absolutely. And I think when you fully understand real estate, you realize that there's segments, right? So everybody goes, okay, well, I'm a flipper. Well, you don't have to be just a flipper. If you break real estate down, if you break a transaction down into, how are you acquiring it? How are you monetizing the property? And then how are you exiting? And you can pick and choose. Like, you can have a single family home that you've had forever that you've done as a long-term rental. You can come in, do a bunch of rentals and sell, and it's kind of like the back end of a flip. Mm-hmm. So once you understand the pieces, then you can take it apart and reconstruct it again in any configuration that you want.
100%. 100%. Any final words before we close?
Thank you.
I just love what she said about that. Good deals are made. Good deals are made and not found. That's one that's really going to make me think. I always said any property is a good property at the right price. But changing use and everything in densification with all the options, deals are made, not necessarily found. So there's a ton of different ways you can succeed in real estate. So yeah, thank you again, Diana, for hosting us. So yeah, just check out our bios. We have the links for the summit as well. I think Elizabeth has one for the webinar tonight in her bio, I think. And yeah, we'll see you guys at 7 o'clock tonight by Investing by Design, social media and marketing. And then we'll see you guys on the summit. We hope to see as many people as we can. And thanks again, Diana. This was a fantastic piece. I appreciate you sharing this. We had a lot of fun today.
Awesome. Yeah, thank you so much for coming on. So if you guys loved what you heard today, feel free, Cory and both Elizabeth will be tagged on here, so you'll be able to follow them and see what they're up to these days and check out their events going on. And if you love this show, definitely feel free to follow me because I have shows going on every Monday and Thursday. Thank you so much, guys. It was so much fun to chat with you and hear about your event, and hope to see everyone at the event because it's going to be a lot of fun and it's going to be very helpful. Thank you.
Thanks, Diana. Have a great week.
You too. Bye, everyone.
Bye.
Bye.